Hey friends, Ernie here with the Trader of Futures, and today we're going to look at multiple time frames and chart scaling. This is a very important aspect of analysis in your trading because it all comes down to one thing, and one thing and all, one very, very important thing, and that's perspective. Without proper perspective, what is the saying? You get lost in the trees for the forest. In other words, when you're too deep inside of the thick of things, you can't see the big picture. And the big picture is very important. I mean, you don't want to take actions on something when you can't see that big picture. And so that's what we're going to talk about. So again, this is perspective. Incredibly important, and particularly with volume profile. You need to have that perspective so that you can see what is in the past, what has happened in the past, and how it may be affecting the present. And fortunately with TradingView, there's a wide range of things that you can do in terms of scaling and multiple time frames. And I'll show you a few of those techniques first. But let's first of all talk about, well, let's come up with kind of a standard on what you would use. How many time frames do you need, and what should be the scale between them? And that's a hard one to answer, and that really comes down to personal preference. Also comes down to the preferred time frame that you like to trade in. So I know a lot of people like to do day trading, or some people like to do swing trading, and others trend trading. And you know my position on this, that the longer the time frame, the greater the probability of your success. The greater you're taking in much more information and less noise. So apart from that, let's just say that there will be 3 primary time frames. And if you're a day trader, you're probably going to be looking at, an hourly chart, 15-minute chart, maybe even a 5-minute chart. If you're a swing trader, you're probably going to move to a hourly or a 4-hour chart. If you're a position trader, you're going to look at daily charts and weekly charts. So think about that in terms of the amount of information that you want to bring into view, so that you can make proper decisions, so that you understand where the influences are in the longer time frame. Because the longer time frame view and the structure that results from that is going to have a direct impact on your trading time frame. So you have your sort of analysis time frame, and then you have your trading time frame. So what that's really saying is you probably only need 2 primary views. So if you're a day trader or a swing trader, you probably need a daily chart and then an hourly or a half-hour or a 15-minute chart. If you're a swing trader or a position trader, you're going to need maybe a weekly, daily, hourly. So you basically have to come up with that, whatever is comfortable for you. And a lot of this is kind of a moot point, and particularly when you're talking about, how much information that you're bringing into the chart, because you don't necessarily have to switch time frames. You can do nothing more than scale the chart and just bring in more information, and I'll demonstrate that right now. So what we're looking at right now is a 4-hour chart of the Dow 30. And this is the E-mini Dow. And we can see this huge move off the bottom. And it's just a spectacular move. We've got our volume profile over here on the right. And we don't see a whole lot of detail up top here. It's really not conveying a lot of information. I mean, are we at a resistance level or not? Is there a volume well? It looks like there's a volume well, but it goes into nothing. So it's very difficult to tell. The other problem here is a problem of scale. I'm looking at this volume profile, and Well, I'm really only showing it at about 20% scale. So, in other words, we've taken the scale of the profile and kind of squished it down into the right side of the chart. I find that you want to scale it out to exaggerate the volume nodes from the volume wells. So in my view, this should be probably more like 50%. And so now we're getting somewhere. Now we actually see things that seem like they have relevance. They're not just these tiny little pimple bumps. They are hills, they are valleys. And that's what you're really looking for. Now again, I can't see a whole lot of information here. I have a couple of choices. I could go to a different time frame, like the daily. Let's go to the daily. And now I've brought in more information. And that helps some. What I'm losing with the daily, or what I'm gaining, first of all, with the daily, is this extra information, these tops that I couldn't see because they were out of range. They simply weren't included in the chart. And I can see right now, if I were to draw a horizontal line right about here, right where we are right now, there appears to be a volume well there. But in the daily chart, that volume well isn't very discernible. I don't have the same granularity or clarity in there. All right, so here I've shown how I can use a larger time frame to do two things. One is to realize that there is more information by bringing it into the chart. Another thing that I can see here is that this is clearly the end of a long bull run and then a consolidation, which I couldn't see before. And so that might give me clues on my longer term view if I'm a position trader, whether or not this is just a consolidation and a continuation pattern, or if this is something different. So if I switch back to the 4-hour chart, I've lost that daily, but have I? What I can do is I can compress the calendar until I bring that other information in. See, now I've brought that information in. I can reposition the chart as well, and I can bring in more information over here on the left. And all that information will add to the volume profile and give me a much clearer view about the intensity, the value, the magnitude of the volumes, the volume nodes, the value nodes, and then the wells. And now I can see very, very clearly where this volume well drops off. It's right there. Right at about 26,180, 26,200. And I couldn't see it that clearly. So now that gives me a much better view, a much better target or entry point that I can choose to maybe take a short. Or if it's a breakout, I have much more discernment here. I can see that this is definitely that area now. I could go down to an hourly chart. But again, I'm losing a lot. I'm losing everything that happened before there, but I can bring it back into view by compressing the chart. So I've compressed the chart. Now I can see with a little bit more granularity. I can compress it in the horizontal and the vertical. And now I can bring in more data. So you're not limited to just the time frame. You can compress both the time frame as well. You can compress the time frame, obviously, or choose a different time frame. I'm seeing the same information, but with greater granularity in the 1-hour chart that I saw in the hourly chart that I also saw in the daily chart. But now I can see the levels much more clearly. The other thing, again, what I did was I exaggerated the volume profile too by changing the percentage that it fills up, the width, the percentage of the box that it fills up. I guess that's the terminology in TradingView. I could go to 75% and see what that looks like. I mean, that might be a little bit much. But still, these are your options. Use them to the fullest. Maybe 40 or 50% is good enough. But I don't know. You know, maybe I want to get a really close-in view of that. And maybe that 70% worked better for me. All right. So I've shown you how you can use time frames and scaling of the chart so that you can compress the time, the calendar, bring in more information, improve the resolution of the information that you see by expanding or contracting the volume profile so that you can see that move across the chart and see where it intersects the chart, becomes much more clear. You can also gain greater visibility in the profile itself. And there was one thing that I didn't show yet in volume profile, and I'll do that right now just so that we don't forget about it in terms of granularity. We can go to the chart and we can choose under input the row size, the number of rows. So currently we're showing 200 rows from top to bottom of bars, horizontal bars. I mean, I could turn that into 100, and that is going to drastically change the thickness of the bars and decrease the granularity. I was at 200. I could go to 300. And then this is going to give me much more clarity and where the actual edge is. Where the actual edge is. Really, really important. All right, so we've seen another way that we can increase or decrease the granularity, the clarity of our analysis. All right, so there you go. Multiple time frames and chart scaling, both the price chart as well as the volume profile, to gain a new perspective or multiple perspectives so that you can understand the full picture and you can see the forest through the trees. Thanks, folks. We'll see you next video.